something to be aware of. Indonesia issuing a tsunami warning after a 7.1 magnitude earthquake, according to the EMSC. Just into this NFP number at the bottom of the hour, just looking at the Fed Fund futures positioning, pretty much holding on to the gains ahead of these NFP data. Fed Fund futures implying traders see 100% chance of the Fed cutting rates by 25 bips in September, up from 85% late on Thursday. Those futures imply traders see 74% chance of the Fed cutting rates at least the 1.5 to 1.7% range by year end, up from 69% late on Thursday. So we're just under 10 minutes time till the bottom of the hour in the US non-farm payrolls report. Just going through all the estimates for you. Bloomberg economists looking for a headline number of 165,000. Reuters economists pretty much the same, 164,000. It's all against a prior of 224,000, with a range between 74,000 and 236,000. The unemployment rate wise, Bloomberg economists seeing that to come in as a drop to 3.6% versus the prior of 3.7%. Reuters going with an unchanged estimate of 3.7%, with a range between 3.5 and 3.9%. Earnings month on month seen to come in at 2%, unchanged on the prior, with a range between 1 and 3%, with the year-on-year print expected to come in at 3.1%, again unchanged on the prior, with a range between 3 and 3.3%. Private payrolls, Bloomberg economists looking for a print of 165,000, Reuters 160,000. That's all against a prior of 191,000, with a range between 121,000 and 222,000. Manufacturing payrolls seen to come in at 5,000. Average work week hours, meanwhile, for July seen to come in unchanged at 34.4, with a range between 34.2 and 34.5, with labour force participation rate expected to come in unchanged at 62.9%. At the same time, we'll get the release of the US trade balance for June, expected to come in as a deficit read of $54.6 billion against a prior deficit of $55.5 billion. And Canadian trade balance as well will also be on the wires at the bottom of the hour for June. Deficit of $30 billion expected versus a prior surplus of $76 billion. The median estimate for the headline NFP print is 165,000. Looking at some of the bank desks, then the brokers, banks, what they're looking for, broad range really between their estimates of 160, 170,000 for the headline print. JP Morgan going for 160, Citi 171,000, BAML 170,000. On the upper end, you've got Goldman Sachs with 190,000 and UBS with 191,000. And on the lower end, Deutsche comes in with 150,000 for the headline print. Meanwhile, banknote from TD Securities, they expect payrolls to trend lower to 170,000 in July following the strong 224,000 print in the previous month. In particular, they expect job creation in the manufacturing sector to mean revert after the 5-month highs of the 17,000 increase in June. Together with what they say somewhat slower hiring in construction, this should bring employment in the goods sector back to its recent average. Likewise, they forecast employment in the services sector to moderate somewhat from its firm June print. All in, the household survey, they said, should show the unemployment rate remains steady at 3.7%, while they expect wages to rise 2% month on month, which leaves the annual print unchanged at 3.1%. Also just seeing a tweet from the Pantheon chief macroeconomics economist Ian Shepherdson, saying a bit of downside risk to the July average earnings number because the 15th, the payday for people paid semi-monthly, fell after the survey week, tends to introduce a negative bias to the read. Consensus, of course, only for spot 2%, but a spot 1% for that month-to-month average hourly earnings read is not off the table according to Pantheon. So just under 3 minutes time till the non-farm payrolls print. A reminder for the headline print, looking for a read of 165,000. Earnings month on month seem to come in at spot 2%, year on year seem to come in at 3.1%. Unemployment rate expected to come in unchanged at 3.7%. Private payrolls, 160,000 is what estimates are looking for. Manufacturing payrolls, 5,000 is expected there. Work week hours, 34.4 is expected. Labour force participation expected unchanged at 62.9%. The US trade balance expected in as a deficit read of 54.6 billion, with the Canadian trade balance expected in as a deficit read of spot 3 billion. So in terms of the ordering, what we'll do is we'll lead with the headline non-farm payrolls print, then move to earnings month to month, year on year, then the unemployment rate, and then go back and fill in the private payrolls, manufacturing, etc.
Hey there. One minute to go.
Just under a minute.
Wow, the spread though. Non-farm payroll rock.
Ten seconds. $164,000, earning month on month, spot 3%, year on year 3.2%, unemployment rate 3.7%, private payrolls 148,000, manufacturing payrolls 16,000, workweek hours 34.3 with a labour force participation 63%, US trade balance deficit read of 55.2 billion, prior revised deficit 55.3 billion. There has been a downward revision on the headline non-farm payrolls as well. 193 is the revised number versus the previous prior of 224,000. Earnings month on month as well. The prior earnings month on month read has been revised upward to spot 3% from a previous prior of spot 2%. So earnings beat month on month there, spot 3%, on estimates to spot 2. And the 2-month payroll net revision comes in down 41,000. Meanwhile, Canada's trade surplus with 7 billion Canadian dollars.
Wow, look at going, someone.
Yeah. It took a while actually. It's kind of strange.
So cheap.
Apparently Fed's Rosengren has issued a statement on his dissent at the recent FOMC meeting. Rosengren saying no case for additional accommodation at this time. As a reminder, he's one of the most hawkish members on the FOMC and a voter. So Rosengren citing low unemployment and stability concerns, saying they're somewhat elevated given near record equity prices, corporate leverage, but he does not see a clear and compelling case for additional monetary accommodation at this time. We'll put it on our board for those who want to see the full statement. But there's not much else really to the statement. PBOC is to stick to prudent monetary policy with a proper balance. PBOC saying is to keep a balance between tightening and easing. That's the PBOC issuing a statement on its second half work meeting saying it's improved policy coordination in the second half.
You better turn up. You better be there when I shake. Watch me rockin' if I can't stop. If I should fall, just go ahead. Go and catch me, baby. Ooh, I live it. That's my true love, true to love. Ooh, I love it. Crank it up, yeah, yeah, yeah. Turn it up, turn it
PBOC to expand financial opening, widen market access, similar to some of the comments we've heard already this week.
You better grab that tambourine. Bring the bass, we might be wicked. We may be forced to cause a scene. Make some trouble, baby. Ooh, I live it. That's my to the Ooh, I love it. Crank it up, yeah, yeah, yeah. Turn it up on a higher level. Turn it up, we got this.
PBOC also saying it's to lower the bank's reserve requirement ratio at the appropriate time. PBOC saying it will comprehensively use multiple monetary policy tools in the second half.
gold.
In crypto news, the PBOC is saying it's to accelerate research and development for digital currency and electronic payment.
I guess that was it. Short move up about 12 pips and then we're down 15. That's a very, very, very boring NFP. Anyway, that's it for today and for this week. Wish you all a great weekend.